Bit of a quiet day. Like you said, the earnings season is getting over. We do have the WPI, CPI data, but barring that, there's not too much in terms of cues, right? So it could be quite light that way. We are watching the China reopening, of course, and what that would mean for Brent prices. So that is important. In terms of stocks, today you're seeing a lot of action in the metal space. So of course, Hindalco is doing well, but the rest of the metal pack also holding up quite well. On the downside, it is largely the pharma names which are finding themselves there. So a few of the bigger ones will come up for you. And that is what we're tracking in terms of stock-specific action. Of course, a lot of earnings reactions as well coming through. But speaking of earnings, let's invite our first corporate on the show. Brigade Enterprises is in focus on the back of its second quarter earnings. The residential and commercial businesses have seen a decline on a year-over-year basis, even as its hospitality operations have seen a pickup. So to discuss the quarter gone by, the project pipeline, as well as sales outlook, we're joined by Pavitra Shankar, who's Managing Director of Brigade Enterprises. Pavitra, good morning, and thanks a lot for joining us. So can you take us through, we've already seen what you've clocked in terms of the first half. Can you tell us how you expect bookings to move for the second half?
Hi, morning, ladies, and thanks for having me on the show. Yeah, actually, we've had a pretty good quarter. We've actually had a better a better half compared to the last year, at least on the residential sector for sure. So we actually have done about 2.4 million square feet of residential sales in the first half. We expect to see this number, do very well for us in the second half of the year. A lot of our launches that we had given guidance for at the beginning of the financial year, we already knew that most of them would happen in the second half. So at the beginning of the year, we had indicated around 10 million square feet of launches, of which 8 was residential. 2 of that has already been launched, and the remaining, we have good visibility that it will be coming up over the next 2 quarters of the financial year. So what we're seeing in terms of on-the-ground reaction, there is very good demand. We have actually, we're about to announce a launch for our first very large plotted development project in Bangalore. So we expect to see those numbers coming in Q3. And overall, I think we'll actually have a good quarter in Q3 and Q4 for residential.
So you're maintaining your residential or the total launch pipeline at 10 million square feet for FY23, right? That's on track. Could you give us an indication of realizations? It ticked higher on a quarter-on-quarter basis and on a year-on-year basis. What led to that in the current quarter? Was it an account of a change in product mix, higher pricing, lower costs?
So a bit of all, I would say. A lot of our sales are happening in East Bangalore, in Chennai is also contributing. So all of that results in a higher average realization. Also, we have been taking up pricing across our portfolio. We've been doing that over the last 3 to 4 quarters and without seeing too much resistance from customers. I think they do believe in the brand and the product quality and all of that. So we've been able to do it. That said, I will say that once we start seeing our plotted projects rolling into the sales numbers, we will see that number come down a little bit. But as it gets supported by additional launches over the next rolling 4 to 5 quarters in Chennai, it will start to come up again.
Okay. So in terms of numbers, right, I mean, in the first half of the year, Pavitra, you've done about 1,500 crores of sales, which is a growth of 18%. Going by the same growth trajectory, if you do about 18-20%, you're looking at 1,800 crores for the second half of the year. Is that doable, 1,800 to 2,000 crores, and just for the second half? And what is the prognosis for the full year?
So on an ongoing basis, I think we're sort of on track because we've always communicated a growth of around 17 to 20% year over year or quarter over quarter, whatever it may be. I'm actually pleased with what happened in H1 because despite our launches being pushed towards the second half of the year, we've still managed to maintain what we've communicated. So I think the second half of the year should be pretty good. We are expecting a bunch of our launches to roll in, mostly in Bangalore. But that said, we are expecting very good demand for those. So I think we're on track to achieve the 17 to 20% growth over last year as well.
Okay, can you take us through what is happening on the commercial segment? Because if you look at it versus last quarter, there has been quite a fall, around 50% lower than last quarter. So can you take us through what really led to this and how do you see the lease rentals panning out?
So, I mean, as we've had for some time, I mean, we do have some leasing of our World Trade Center Chennai and Brigade Tech Gardens projects. Those actually account for most of the vacancy, the leasing vacancy that we have today of about 1.5 million, these two projects account for around 1.3 million of that. Both projects are completed and operational, and they are fantastic product in terms of quality and location. I think what's happened overall is just the general sentiment right now in terms of office leasing. There is some, of course, ongoing confusion about work from home and hybrid, but I would say the larger effect right now is coming from global sentiment on recession seeming pretty definite from the United States, and the rest of the world economy not doing so great. While India is a bright spot in terms of everybody's predictions for the coming year, we'll just have to see how that translates from companies based in other countries trying to look at sourcing more of their growth from India, and how that will actually result in RFPs on the ground for space here. So while there is interest, I think because of the global outlook, there is some sort of slowdown across the board actually in terms of leasing.
Can you talk a bit about the hotel business and the outlook? It's showing you a strong recovery. What were the average room rents, the ARR this quarter? And your occupancy has declined on a quarter-on-quarter basis for the hotels business. What led to that? And do you think the occupancy can pick up in the current quarter? Can it, say, hit close to about 80%?
So, yeah, hotels are doing very well, actually. And obviously, that's a lot of pent-up demand from post-COVID, a lot of the restrictions that just did not roll out until earlier this year. So as travel is picking up, as you know, Bangalore also recently launched its Terminal 2. So all of this, I think, will result in higher travel domestically. And we actually expect to see that impact the hotel business. Q2 in general was a little softer. I think a lot of the demand came back in October due to the festive season. And I actually think that while you mentioned that the occupancies had reduced, overall the ARRs had increased. So when we look at a RevPAR basis, which is a product of both ARRs and the occupancy, we're actually doing much better than pre-COVID levels. And we're expecting good things for the hotel portfolio for this year and going forward. All of our hotels are business hotels. They're doing well. And we expect to see the trend continue.
Okay, all the best, Pavitra. Thanks a lot for joining in and giving us an update on the business. That's Brigade Enterprises with their view on the overall real estate space. Let's do one thing. Let's take a quick break. When we come back, we'll discuss what's buzzing in the commodity space with Manisha Gupta.